All right, guys, how's everyone doing? Paul 6 here with the mentorship session. Um, Real quick, let me know if you guys can hear me, see me, and most importantly, see my screen. Um, Today we are gonna go over, hey John, how's it going? Ahmed, Jason, Michael, what's going on, everybody? We've got a pretty good turnout considering it's during market hours. I know a lot of members are at work, so thanks for attending here. So, as usual, I really want to get to the questions. We're going to get into some mentoring, whatever you guys want to talk about. Um, if there's any stocks you want to go over, any concepts you want to go over, we've built up some concepts now. Now that I think this is the sixth or seventh mentoring session, you guys remember you can go in and look at the past mentoring sessions. I always include the link in the reports. And even if it's not topical in the sense that the market's doing something different now, we always have some kind of concept we go over. So, and then other people's questions can help you as well. Okay, Joseph said that there is no audio. You guys can, but it looks like most of you guys can hear me okay. So it's probably something on your end, Joseph. So today we're going to talk about a little about the market, which we do every day in the report. And you guys know what we've been focusing on in terms of sector rotation, but we're going to talk about that with a comparison chart. And then really quick, what I'm going to do for the concept for the day today is get into how we stock pick when we get into a sector. So we've identified, we've been talking about this for about a week now, software, even though there were some software stocks that have been continually coming into our focus list, we're really focusing on that area now. So we're going to go into the software sector and we're going to actually kind of go through how I develop my watch list, not the focus list you see, but the overall bigger watch list of the software stocks that we're going to watch for the next few weeks here. And then after that, this should only take about 20 minutes or so. We'll get into your questions. So have your questions ready. Don't give them to me now, but when I ask for them after we're done with this, we'll get into the Q&A. Open anything you guys want to talk about. All right, so let's get into, first of all, what's going on in the market. You guys know this from the report. The market looks like we're in a continuation pattern, basically through most of this year, except for this little rough period in here, which actually is most of the year. But even when it ran up here, we'll say the last 2 years, we've been in a continuation pattern and every dip has been bought. And even this year's big kind of 4 month range here was bought up. So we could say that's still a continuation pattern. And the market has resumed trend in a couple of ways. One, the intermediate trend, which essentially resumed trend in August. We had the big dip here, kind of recovering, and then finally we resumed trend once we broke the high. Now, what's more important to us right now is near term, and we've been watching to see, you guys know, heading into this week, whether we would break down at this level and test some of these supports, which still would be standard pullback, but it would be a little deeper, probably stops us out of, the few positions we have right now. But as of yesterday, it looks like we're in a near-term continuation as well. So this is what we want to see now. And today, we're holding the level, but not really getting the continuation we'd want to see, but there's a lot of day left. Heading into the end of the week, early next week, we want to see continuation here. But overall, I would say, and I always head into a week asking myself, am I neutral, slightly bullish, very bullish, slightly bearish, very bearish? And heading into the week, I was more neutral, slightly bullish, and we're getting towards more slightly bullish and even aggressively bullish if we start to continue here. So, and there's some other factors we look at. We've talked about market breadth before in some of our mentoring sessions, which is okay right now, not great, but not bad either. So that's where we are in the market. Now let's talk about the sectors, and we are seeing some sector rotation from the beginning of the year. So basically since January, this whole year here, and even a lot of last year, the main focus was big tech. Big tech was really strong. And now we're seeing some mixed signals in big tech, and we're seeing a couple of other areas emerge. And I've created this comparison chart. I mean, there are a lot of different areas, but to illustrate a couple of areas we've been talking about. So since January here, now we can even start before January, but let's actually get to January here. And I got to get Netflix up here. So Netflix was basically leading. So what we have here, the price action here is Netflix. And you can see here, Netflix was leading. Facebook was as well. I don't have Facebook on here. But big tech was leading, and the leaders of big tech were basically Netflix and Facebook. And we've seen a big change since then. But let's go over what was working. Netflix was working, Amazon was working, which still is. And then kind of at the bottom of the pack here, which were still doing decent but weren't leading, were Apple. And then the two sectors, and we've talked about this relationship between the FANG stocks and Apple and Amazon and Netflix. But now let's talk about some of the sectors. You can see here, XRT, which is retail, was way down here, and software was way down here. So even though big tech was working, other areas in tech were, while not doing poorly, were lagging big time, and you wouldn't want to be trading those when you could just trade big tech. Now remember, we had a webinar, I don't remember if it was a mentoring session or a webinar, where we talked about breaking down tech and seeing what's working in tech. So some different areas: semiconductors, cybersecurity. IGV is software, and software was lagging at this time. Semiconductors were doing well. Now we're seeing kind of a flip. So remember what you're seeing here. Basically in order: Netflix, Amazon, software, retail, and Apple. Now, if we look more near term, and we'll go to the last month, we've seen a big flip in what we were just looking at. So first of all, until just recently, Netflix was lagging big time, and it still is. And let me even get a little closer here. Netflix was lagging big time. Now, number one is Apple. Apple is leading, right with software. And then we've got Amazon, which is still doing well. And retail here is a little tricky, because while it is showing up kind of towards the bottom here, if we get into some of the retail areas we're paying attention to, and let me, well, I'll go back to that in a second. But if we go to specialty retail, retail manufacturers, and this retail covers a really broad area. But if we go to some of the retail that we pay attention to, retail is actually really strong. So this is a little bit misleading here in terms of retail. So retail is definitely an area we want to be watching. And you guys know, in the focus list, we have a number of retail stocks right now. Software is definitely an area we want to be paying attention to. So let's actually break down software. So it's all about relative strength, and you can see here how we're focusing on relative strength in terms of what is strong and what is not more near term. And then if we get into the sectors here, I've ordered them by the last 30 days. And you can see here, number 3 after health information and consumer electronics. And a lot of the consumer electronics, actually, some of them I think will overlap with software as well. But number 3 here is software applications. So obviously, over the last 30 days, software applications very strong. If we just compare it to SPY, and that's what I'm talking about when we're talking about relative strength, look at where it is compared to its 9, look at where it is compared to its 50-day moving average, and look at where it is compared to its old high. So the old high in software is 11,145, and we're already at 11,68, so we're already at highs. Now, if we look at SPY, you can see SPY is just barely at its 9, not as big of a gap at the 50, and not beating its highs quite as high as software application is. So that's what I mean when we talk about relative strength. So obviously, very strong, third leading sector. And here's what I meant by retail too. You've got grocery stores, you've got discount stores, you've got apparel stores, which is what we've focused a lot on. So textile manufacturing. So even though that XRT was lagging a little bit, that covers a broader range. If we actually look at what we think of when we think of retail, apparel stores, textiles, grocery stores, discount stores, all leading, all in the top 10 of sectors over the last 30 days. So definitely two areas we should be watching. So keep that in mind going into the end of the year here, that we have had a bit of a shift in terms of sector rotation. And while there might be more shifting right now as we head into the fourth quarter, as earnings are going to, and the next set of earnings are going to come up pretty soon here in a couple of weeks. We're really focused now on that software application area and on select retail areas. So hopefully this makes clear what I've been talking about in the reports, why we're so focused on these areas. Now, let's break down retail. There's a couple of ways you can do it. One, you can just go into software application in TC2000, or, and we'll just quickly do it this way, you can take the sector ETF. So anytime I see something like, if I see software that's doing well, I know I can pull up the sector ETF, IGV, and I can break down that sector. So all you have to do on TC2000, and if you went into whatever software you're using, you should be able to break down the ETFs. So IGV is the ETF. We can click on this little tab here, and we can see the 64 different stocks that make up IGV. And IGV is basically an accumulation of all these different stocks. So let's do that, and let's go ahead in terms of relative strength. Let's track it by the last 30 days, and we can even do the last 5 days. And if we do the last 5 days here, we should get some of the strongest software stocks. And that when I break a sector down and start looking for good stocks within that sector, that's basically what I'm doing. I'm looking for the strongest stocks within that sector. So and then I start looking through the charts, and we look at a number of different factors. So if we look at ATV, a couple of things I'm looking at. One is the float size. You guys know that we like lower float stocks. I want to see how volatile this stock is. Now you can eyeball it on TC2000. There's this number here for ATVI. It's 33. For sale, it's 49, which is obviously better. The higher that number is, the better. It's telling us it's more volatile. Now, in terms of ATVI, I think it's a stock definitely worth watching. Now, these are stocks I'm going to put in my watch list. Not necessarily the focus list that we're going to say we're going to trade tomorrow. Now, this is way too extended for me to trade, and it's coming into resistance. So there's no way I would enter here at 81, but definitely one that is on my watch list. So I've got a list of about 15 different software stocks I'm watching. ATVI is definitely one of them. Let's go to hubs here. Low float, very volatile. And it does have some short interest, which TC2000 doesn't give you anymore. But that's a factor too. I like something that has a lot of short interest. Definitely a stock that we should be paying attention to. So that would be on our list. So if you're building a list of software stocks you want to be paying attention to, hubs should definitely be on that list. Sale, another one, low float, very volatile, nice trend. Doesn't mean we can enter here. We can't enter here. It's too extended. But in another one, definitely we would be paying attention to. PTC, also really strong. Now, if I was comparing sale and PTC, sale and PTC, I'm probably going to go with sale because it's more volatile, and you can see the extent of the move has been greater. So even though this is a really strong stock, I'm probably not going to watch this one. So right now it's ATVI, hubs, sale, Pacey, very volatile. That number is 60 here. Look at the big run here. Low float. I'm guessing it has some short interest here. That's why we got this big move. Now it is very extended. I wouldn't enter here. I might even consider shorting if it started to break down. But definitely a stock we should be paying attention to. And you guys know it's been kind of a staple of the focus list, even though I have not traded it yet. And I kind of missed the move right here when it made that high tide flag. QLYS. Now some of these there's overlap. So for example, ATV is a gaming stock. QLYS is a cybersecurity stock, but all under software application. Now, is this a stock I would be putting on my focus list? I actually do watch this stock, but in terms of what we're doing now, it's not one of the best, even though it's made a nice run in 2018. Near term now, it's lagging the other one. So, I don't need, I'm happy to watch Sale, Hubs, and ATVI. And right now, I don't need QLYS as one of the better software application stocks. ULTI, really strong. PRGS, now compare this to what we've been watching. ATVI, Hubs, Sale, all in nice trends. ULTI, all in nice trends. PRGS basically has been lagging, broken here. So probably not one that I would watch, even though it's maybe a bottoming formation. There's better software stocks to be trading. ADB, nice trend. Not as volatile as the other ones, doesn't make as big of a move, but you still could watch this one. And that's basically what I'm doing here. So the stocks you see, Take Two is another one that we're watching right now. Zen, you guys know, is on the focus list, and you can see why here. So when you see the stocks get to the focus list in the report, this is how they're getting there. I'm not running any scans. Basically, the only scan I'm doing is filtering these for relative strength. But other than that, I'm identifying a sector that I like, and then I'm going into the sector and basically picking the best stocks in that sector. All right, guys. So that's basically what I wanted to go over today. We've got a bunch of software application stocks. So an exercise for you would be to finish up what we just did now. If you have TC2000, go into software applications, pull up IGV. You can go into FinViz and do the same thing. Their grouping might be a little different, but this is a routine you want to get into in terms of how you pick the best stocks. So that's how I'm doing my stock picking, is picking the best stocks within the best sectors. All right, guys, that's what I want to go over today. Now let's get to the mentoring and your questions here. You guys have already posted a few. Vineet, if I'm in ATV up 10 points, should I just watch my stop? I would probably use a trailing stop if I was in it. Obviously, I'm not. Well, actually, sorry, with ATV, I would be getting out because it's heading into this strong resistance level. And then if it were to break that level, you could always get back in. All right, Celgen, is it a good buy here? So this is one of the bigger biotech stocks. And I would, now you could be on watch here as maybe a bottoming formation, but there's no real good signal here. The only way I would enter Celgen at this point is if it came back up here and remounted the 200-day moving average. Otherwise, I would not touch it here. Microsoft. I think if you pull up software applications, Microsoft is in there. Microsoft, strong stock for a big tech stock, but look at that volatility number, it's 17. So you're gonna get the same pattern, but much bigger gains trading those other stocks we talked about, like Sale, which or Sale or Square. So look at the way this thing is run. It's run from 70 to 90. Compare that to what Microsoft has done in the same time. We're talking about a 5% move here, whereas Square is going to give you a 20-25% move in that same period. So Microsoft is good, but I wouldn't put that on my list. Can you show where you will move stop to break even, or will keep it a majority of the time you move stop to break even once in the money? Yeah, once I get about, basically once the stock has made a significant move to where if it pulled back to my entry point, the stock would be breaking down. That's where I put it at break even and basically make it a free trade. There's no point at that point in letting it hit your stop. So for example, let's just say we were trading square here and we entered at 75, and let's just say our target was 100. And let's say my stop was at 70. At this point, there is no point in putting your stop at 70. If it starts to pull back here, you should be getting out. So I would at least have it at break even. So I don't have any hard and fast numbers in terms of risk or percentage gain, but I do think to myself, okay, if it starts failing at this point, would I still want to hold on? And the answer for, usually once you get about to 1.5 to 1 on your risk, the answer is going to be no to that. Okay, take on MU. I wouldn't touch MU right now. It is really beaten down. Maybe if we get a reversal signal, um, somewhere in this range here or even down here, but I wouldn't touch it unless there's a strong reversal candle. Something like what happened in February when you had this big hammer right here. But at this point, there's nothing to do with that. IBB, okay, biotech had been leading and has pulled back. And biotech is one of these areas where you get a series of runs. You get big runs to the upside, big runs to the downside. I would not touch biotech here. I would wait to see what it's going to do. Until it remounts a 9, I probably wouldn't touch it. But if it does remount a 9, I think we'd be in trend continuation mode. Okay, Michael, AAXN. No, I would not sell AAXN right here. You guys know we're in this stock. Entry was around 69. I have moved my stop up to entry, but there's no need to sell right here. I don't see a reversal candle. I don't see anything saying this is anything other than consolidation. And if you do sell at this point, even if this one doesn't end up winning, over time, you're going to cut a lot of your winners way too short because it's very rare for a stock to just go straight up to your target. How can we distinguish between FOLM? I don't know what FOLM. I know what FOMO is, so you've talked about FOMO and intuitions. Can you clarify, Monique, what FOLM is? How do you identify sector rotation? So I'm analyzing all the sectors basically on a weekly basis. So every weekend before Monday, after the close on Friday, I go through all the sectors. It's a larger process than I can go over here right now, but at its simplest level, it's basically identifying the strongest sectors, and you start to notice what sectors are coming in and out of favor. BHC. All right. Bosch Health Company. So it's in a good sector. Drug manufacturers. If we break down biotech, this is one of the areas that has been doing okay. Overall, the pattern is much like biotech, although it's very strong today. I haven't been paying attention to this, so I don't know what the news is, but we do have a lot of volume coming in and a breakout. So I think this is a very good signal for this stock, getting up over the moving average on stronger than average volume. So I would say definitely something you should be considering at this point. All right, Kishan, what are your thoughts about Lulu after crushing earnings? Definitely, you guys know we're watching this in the report. And at this point, basically exactly what I said in the report, either yesterday morning or today, we're basically waiting to see how it handles this pullback. Nothing really to do with it right now unless you entered on this day, but hasn't really continued at this point. So I would wait and see if it starts to show strength here. What I would really like would be for it to pull back a little bit and then show strength at the 9 at this 150 level. If it shows that it's holding that level strong, definitely consider getting in. Also, if it breaks the high at 160. Okay, can you elaborate a little on trade management rules after entry versus putting on a trade with a stop and forget? Okay, I think you're talking about when I say set it and forget it. So whenever we go into a trade, I have a plan, and it's basically set it or forget it. So for instance, let's just say we entered Lulu here at, uh, let's just say it pulled back to 150 and we entered there. Stop, let's say, is at 147, target is at 160. So yeah, we do have that set it and forget it mentality. But there comes a point where my stop doesn't make sense anymore. So for example, if we entered at 150 and this thing ran to about 157 where we're not quite at our target yet, but once this thing ran to 157, there's no way 147 would be meaningful anymore. At that point, if it starts to pull back in here, I'm going to want to turn it into a break-even trade. You don't want to, once you're sitting on a win like that, you don't want it to turn into a loss. So that's the spot in terms of trade management where I'm adjusting my stop. I'm not getting out of the trade, so it's not micromanaging in the sense that I'm just jumping out. But it is all right to adjust your stops and even targets at times if it makes sense according to the price action. Okay, Red Hat RHT, Jason. This has not been on my watch, but it does look interesting here. So it was in a nice trend, broke down on earnings, has pulled into the gap here. So I do think you actually have a decent entry at this point with a target maybe up here around 164. All right, Adam, thoughts on Cal? Footwear. Footwear is an area I'm watching. It did gap down here, showed some strength. I think there are some better footwear stocks. You could go with Nike, which is in a nicer trend here. I know there's some controversy with Nike, but after that dip, it's actually done very well. Under Armour, you guys know we follow Under Armour a lot, has pulled back here, but the overall bottoming formation is still intact. What else? Deck here, I think is a little stronger. So um, I guess it's okay for a gap down setup, but there are other stocks I'd probably pick. Okay, what do I think about Facebook? I think I might have mentioned it in the report yesterday or today. At this point, I wouldn't touch it. It almost looks like a dead cat bounce here, failing at the 9. I think you could consider shorting it at 160 if it breaks this low, and maybe getting long if it remounts the 9. So essentially, nothing really to do unless it breaks 160 or breaks 168. All right, Tesla. On the last, entered Tesla on 20% down day with a very tight stop, risking only $200, still holding. Okay, so you entered on the 20% down day, which I'm assuming is this day here after the CEO was on Joe Rogan's podcast. It has bounced since then. Um, in terms of taking profits now, it depends on where your risk was. If you've got 2 to 1, obviously you can consider it. Couple of ways to play this. I won't tell you how to do it because I can't do that. But if I was in it, say I entered at 263, say I used a 10-point stop and I'm sitting on 2 to 1 right now, I would probably get out here at the 9 and then get back in if it breaks. Now, the other thing you could do, 2 other ways to play it is you could take a trailing stop. Like if it pulls back to about 280, I think you still have 2 to 1 on it. So you could just see if it holds this level. And if it pulls back to 280, you get out and you still got 2 to 1. Or you could take a partial, get out half here and see what the rest does. That's the way I like the least. So I would either get out and get back in or use a trailing stop. All right, Bruce, I explained this in the report, so you can go back to the reports and listen to it. We talked about Netflix. I did initially, I don't remember where my entry was and where my exits were. I think maybe this arrow here is where my entry was. Initially, we were sitting on a gain. It pulled back. I think I had my stop at entry level, but let it slide. Obviously, I thought the setup was still good. So that's basically the strategic reason. I don't remember the exact setup there. But if I have a strategic reason to still be in the stock, I'll stick with it. But I did mention what I was doing in the report, so go back and listen to those. I'm using Thinkorswim right now, but I'm thinking of switching to TC2000. What would you suggest? Thinkorswim is great, really good charting software. The only reason I really still use TC2000 is because I talked about sector analysis. Within Thinkorswim, you can't do sector analysis, and on TC2000 you can. So that's the only reason I think you really need to switch. Kamal, I usually do let you know when I move stops up. So listen to the reports. Do you feel like scalping larger stocks more likely to get stopped out due to the wider range? Are you talking about day trading, Eric, or swing trading? I'm not really sure of your question. All right, Susie, we're talking about UGLD strong today at 813. Obviously, we want to see that for UGLD. What is your opinion? My opinion is basically set it and forget it. The pattern is still there. I'm in it. And there's really nothing to do at this point. Now, if you're not in it and you're looking to enter, I do think this is an entry signal. All right. Thoughts on PayPal, DJ? So financials have been strong. PayPal is leading. I like it. So I actually think you could enter right here. So basically, you had to pull back the remount. I think it is a decent entry, especially if you're willing to hold a little bit longer. On what time frame do you define relative strength? Normally, I'm looking at the 5-day and the 30-day. So you're right about the 30-day here, Paulo. Also the 5-day, and I'm also looking at the 90 EMA and the 50 EMA, and how what I'm comparing it to, how they relate to those moving averages as well. Good question, Ahmed, on CJ or SJMS. Now, if you remember, after the Supreme Court ruling allowing states to allow sports betting, this was one of my favorite stocks, and I talk about it as a potential long-term position. And it was doing really well after the ruling, and it's been beaten down since. I actually haven't really looked into the news on why, because I haven't been trading it. But if I was to hold it long term, I would definitely go into the news and see why it's been beaten down. And if there's no significant change in the company, I would consider it as a good value play long term. But that is not a recommendation or anything. You do have to go in and look at the news. CMG, it's on our focus list. I do like this one and think it is a decent entry today, Tim. Okay, Terry missed the entries on OLED and spot. As a rule, if stocks pulls back below the entry point, is it okay to enter? If the setup is still there, it's okay. So let's take a look at these. OLED, I think the setup is still there. It's still above the 50-day moving average. If it closed below that, I would not consider entering, but as long as it's above the the 200-day moving average, I think you're okay to enter. And with spot, this would not be an entry at this point. So we entered down here. It's made its move, pulled back here. I am considering moving the stop up on this, but it's so volatile, I don't know if I want to do that. The only way I would enter spot if I'm not in it at this point, because it's so close to resistance right now, would be if it breaks the 50-day moving average. So you could enter here if it breaks 185. Okay, NMRD. Nice breakout today. for me, there would be not, I usually don't trade these penny stocks, so not much for me to do with that. All right, when you trade an earnings breakout, do you pay attention to EPS, revenue hits or misses? For swings, for quick swings, no, I do not. Uh, I do pay attention to, um, well, I do pay attention to the hit or miss, but really my focus is on price action. So it could actually miss, and if the price action is good, I would still trade it. If I'm thinking about it longer term, obviously I'm paying attention to that stuff. All right, Eric, so your question was day trading, and I forgot what your question was now. Um, Oh, okay. Do you feel like scalping larger stocks are likely? Now, remember the wide. This is a day trading question, but Eric is talking about the wider spreads with some of the bigger stocks. Remember, they have wider spreads, but that doesn't mean in relative terms the spread is wider. So, for example, if a stock is $10 stock, and the bid ask spread is 9.90 and 10, that's the same as a $100 stock having a spread of, I think, hopefully my math is right here, having a spread of 100 to 99. So it doesn't necessarily mean the spread is wider in relative terms. So you have to think of it in that regard. And with the bigger stock, you are going for bigger gains. So really what you're doing does not change. Hopefully that answers your question there. But yeah, make sure you're not thinking of the spread in real terms, but you're looking at it in relative terms. Okay, meat. Let's take a look at meat for Lucas here. MEET. Um, I think it's a pretty strong bottoming formation. We're out of the bottom here now, and we're in continuation phase. Overall, good volume pattern in here. It is a little bit extended, so I'd be wary of that, but overall, I do like it. Um, okay, Ahmed. So Ahmed has a question about risk, um, and I'm not really sure. Maybe as your account grows, the size of your risk is going to increase, but your percentages should stay about the same. So don't think of it in dollar terms. So let's say you risk 1%, it's always going to be 1% as your account grows. So there really should be no difference. You're not going to risk, let's say you were risking $300 per trade on a $30,000 account. Once it becomes 100,000, now you're going to be risking, say, 1,000 per trade, but it is the same risk. So you're basically doing the exact same thing. It's just the account is bigger. Now, if you started risking $2,000, that means you're increasing risk, and that has nothing to do with consistency of strategies. You should never be doing that. Is there any way to screen for accumulation and distribution? I like to eyeball it. You could use things like indicators like on balance volume, any indicator that takes volume into consideration. I don't do that. Jason, I don't trade ascending or descending channels, but I'll take a look at BTU. Um, I would consider this a remount here of the 50-day moving average, and you do have an entry at this point based on that setup. RARX, I like this as a bottoming formation, and the fact that over the recent, now overall it has been lagging, but since June, I would say it's probably leading the sector considering it's up 100%. But I do like the stock overall. SYK. Okay, medical devices, strong sector. In terms of the biotech area, an area that has been leading. I think it's a decent entry here. Maybe a stop around 169, target at 180. TNDM. Wow. Okay, so this one's really extended. 5 to 46. Kind of a tough trade. This looks like, okay, no, there's still room to go here. Open gap here at 53. There's still a lot of room here. It's always tough to enter at these extended levels, but I think you've got such a, just going up to here is 53. That would be 7 points, and you only need to risk a little bit. So I'd say the risk reward is really good here, although it is tough at these extended levels. So honestly, I'm not sure what I would do with that, and I probably would not trade it. BMA. Okay, regional banks in Latin America had been doing really good. I probably would not touch this at this point unless it starts really changing and we get a different volume pattern. All right, TLRY, this one's been going crazy, and you guys know I have not traded it in the report just because it's so risky. I probably would not touch it at this point. I think the entry here was either on the break of the high or this bounce here. At this point, it's pretty extended. Now, it could go higher, but in terms of risk reward, think of how volatile this is. You've got to use a really wide stop here. Okay, one more question here. Let's go to IRBT. You guys know we were considering this one here, and we did go short. Now it's bouncing. Could be remounting as a pullback play. I'd say we'd need to see a little more strength here. Right now, it could be a dead cat bounce and continue down. Volume pattern is good. I would say if it gets above 110, I'd feel safe, and I might even get in this one if it does clear 110. All right, guys, lots of great questions here. So remember, in terms of the lesson for the day, pay attention to the best sectors and the best stocks within the sectors. That's how simple it is in terms of building your watch list. And then we'll do another one of these mentoring sessions in a couple of weeks. If you guys want to stick around, in about 20 minutes, I'm actually going to do a YouTube live for the public. I'm going to go over a lot of the same stuff I went over here, except I'm not going to go over the how. I just have a list of stocks that I'm going to be going over for the fourth quarter. So you can watch that. That'll be on the Bulls on Wall Street YouTube live. And as usual, if you guys have any questions at all, either save them for the next mentoring session or feel free to shoot me an email. All right, guys. So I'll see you next time, and obviously with the report for tomorrow morning.